Okay.
What are we waiting for?
Started.
Hi, I'm Jim Jubak, and welcome to and thanks for coming to my YouTube and Instagram live Q&As. If these are live, does that make my sites dead? Anyway, if you want to see more of me, alive or dead or alive, like Schrodinger's cat, depends on whether how you tune in. You can go to my sites, on my free site, JubakPicks.com, on my paid site, subscription site, JubakAM.com, lots of portfolios, lots more picks. As always, if you like this video, please like it and subscribe to my YouTube channel. That way you'll get notification when we're doing videos and Q&A videos and stock pick videos, etc., etc. This will all be up, posted afterwards on YouTube. So if you fall asleep in the middle because I'm not that interesting, you can catch up then. Okay, so we'll take some questions. One is sort of a continuation of a question from last time where someone said, so you like Pepsi more than you like Coke? And actually, my preference is Pepsi if it's out of the can, Coke if it's on ice, just to be clear on this. But what I said essentially was, I like Pepsi because I think the stability, because of the two legs of the business, is a little better, soft drinks as well as Frito-Lay. And then today I got the question of, well, what about those Coke earnings? Yes, Coke blasted in today, but so did Pepsi last week. So I think what we're seeing is you want to own one, you want to own the other. The two are almost identical except for that stability issue. Let's pull up a chart. There's not much difference in terms of yield. The thing that's really important today is that Coke's earnings really sort of reinforce the market's sense that people want to be around for earnings season, no matter what's going on with the pandemic, no matter what's going on with closing economies, open economies. We're now looking at maybe a 70% year-to-year increase in earnings in the S&P stocks. Nobody wants to be sitting on the sidelines, especially when you've got today Coke and Verizon really busting through. And that's a segue into the next question, which is, well, what do you think about tech earnings? We get a kind of preview for tech earnings tomorrow with Skyworks Solutions, which is a big Apple ecosystem stock. They report on the 22nd, and we get a sense of how all these chip makers are starting to look. But the big week for tech stocks is next week. We get Apple, we get Applied Micro Devices, and we get Amazon. Let's look at an Apple chart. Apple's not been sort of setting the world on fire recently. But what I noticed today is that we're starting to get some good momentum in advanced micro devices, AMD. I think we'll get an upside move out of Apple on the earnings. Apple is I think, just going to announce even more iPhone sales, and the fact that it's now going completely 5G in its lineup looks like it's a big plus. So I think we'll see those, and that's next week. And I think that'll then give the market another week of momentum. What the market will do after that, after next week, the 27th, the 29th, we start to get a real drop-off in earnings after the 1st of August. The one stock I would look for after that August date is a stock called Qorvo. Can you pull up that chart? If you've been around this tech space as long as I have, you know this as, the two companies that merged to form Qorvo were Triquint and RF Micro Devices. They're big RF chip makers, and therefore in everything like smartphones. So they're really into that whole space. They report a little bit later than everybody else. They report on the 4th of August, so you've got a chance to see momentum build up. Okay, another question, which is again related. We're doing lots of good segues here. I've been on the paid site, which is where I run a kind of some posts about options. We're talking a lot about playing options going into earnings season. One question I got today was, well, what about Skyworks? My response to that is, well, I'd rather have a little more momentum behind the options market. I think Skyworks is unfortunately too early. So with options, what you really want to do to play earnings season is you want to buy them before the earnings. So Skyworks comes out tomorrow. It's a little late. You want to buy them before earnings so you get all that enthusiasm going, driving up the price of the options for people who want to be on board for the big earnings surprise. And frequently you want to sell before the earnings, but you want to be in that period beforehand. I recently added options on Apple, AMD, and Cuervo to my own portfolio as well as the online portfolios. Those would be the ones I'm looking for in the next period. A little beyond that, again, another segue, we got a question on Nvidia. You got a chart for Nvidia? Okay, Nvidia finally started trading at its 4-for-1 split price. This is an $800 stock that started trading today around $200. One of the questions I had about Nvidia, well, the segue for Nvidia is that they don't report earnings until the 18th, so they've got a longer period to go. The options tend to be pretty expensive because, hey, this is a very well followed stock. But what I really liked to see today was, well, you know, there's never really been a reason why a stock should go up after a split. I mean, after all, if you owned one share at $100 and you now own 4 shares at $25, what's the difference? None. But the actual truth is, over time, is that we see that stocks tend to go up after the split. It does bring some people in off the sidelines. And what I was interested today in seeing was, well, would we get that kind of post-split bump in Nvidia? It's even more of an open question because, hey, with all of the brokerages that are now enabling you to buy fractional shares, splits should be less important than they ever were. You can always buy a quarter of an Nvidia share at $200. You don't have to wait for the split. But nonetheless, we got a really nice bump on the split today, about 4.5% on the day. I think that means that Nvidia's got a lot of people out there who've been waiting for a chance to buy the stock at $200 as opposed to $800. So I would, again, look at the options for Nvidia before the August 18th date. Okay. We did a little survey asking people what they wanted to hear about, and the one that came up was inflation. This is a really thorny thing because there's the classic conditions for inflation include inflation in the wage market, and we're not seeing that in the labor market. What we're really seeing is almost inflation in commodities prices, inflation in supply chain glitches. So we had Chipotle came out yesterday and saying, hey, we raised prices and people didn't go away, so we're going to raise them again. And we've got pricing power. And Pepsi said the same thing. So we're seeing a lot of companies say that we can pass those costs on to consumers. And for inflation, that means those expectations are getting embedded in the economy. On the other hand, the Fed doesn't look like it feels any need to raise rates, as it sometimes does when it sees inflation getting out of control. And one of the reasons for that is not seeing enough tightness in the labor market to really put that other driver into inflation. So I think we're looking at situational sector inflation rather than sort of an overarching big inflationary push. We got any other questions?
We do. Kelly says, do you have any further clues or thoughts on the tech sector and overall stock market trend after this great earnings quarter?
Well, that is the question. What happens after this? As I said, we're getting a 70% year-over-year increase in earnings for the S&P. I think that here's my theory. We'll test this out. I think that after this, what we'll see is that this is the second quarter, which is historically not a very good quarter for tech companies. But because of the year-to-year, of the low basis, we're going to see really big year-to-year increases for tech stocks in earnings. Third quarter is really great. So I think what you're going to see is a sense in the market as a whole that we've seen the peak of earnings, except for technology stocks. So if you want to look for technology, if you want to look for earnings growth next quarter, I think the place you look is technology. My sense is that we're witnessing this really strange thing, which is that every time there's volatility that lasts more than a day or two, people go, hey, what do I want to buy when the market's getting kind of crazy? And this traditional answer is treasuries. The answer right now seems to be Amazon and Google and Microsoft. You want to buy the big tech companies. So I think that what we're likely to see is kind of a slowdown in the market as a whole after this quarter, because next quarter's earnings growth is going to be really terrible. We're going to go from 70% earnings growth year over year to only about 35% earnings growth. Still a great quarter, but 70 to 35, I was joking about it being terrible. 35% earnings growth, take any day of the week. But I think that's going to put, this market is trading at really high historical levels. I think that's going to put some question to people's minds. I think you're going to see those people who are focused on growth, those investors who are growth investors, classical growth investors, looking more at technology as we go into this third and the fourth quarter. This is both the two best quarters of the year for tech stocks. So if you want to position yourself, that's where you're positioned. Anything else?
Kelly just said, and treasuries when you were saying.
And treasuries. We're having actually a fairly heated debate.
Yeah. She was just saying, like, chiming in when you were saying buy Google, buy Amazon.
Yeah. Treasuries actually went, the treasury yield went up today because treasury prices went down. And that was because I think the big rally in treasuries, which took yields down to about 121 for the 10-year on Monday. It's not impossible to see it going lower than that, but it's like, okay, we had a lot of short covering in the treasury market. There are a lot of technical reasons why treasury prices went up and yields went down. It's hard to see that big a move going forward. Today, the 10-year yield went up to 129. Not a huge move, except in the treasury market. I think what we're going to see in the treasury market will depend not on any actual move from the Fed, but verbiage from the Fed. I've been saying watch the August central bank confab in Jackson Hole, Wyoming. They're big global central banks, and the Fed sometimes uses this as a time to announce a change in policy. So you might get some words about when they're going to be cutting back on bond buying. We get words on the same subject from the European Central Bank. And then the September meeting of the Fed is really critical because the Fed really doesn't have another meeting where they have the opportunity to announce any changes in policy after the mid-September meeting until December. So if they don't say it now, they're not going to say it in October or November. So really puts a lot of pressure on them to figure out what they want to say to guide the market going forward. My guess is they're not going to do anything. My guess is they will ramp up the verbiage, whether they ramp it up enough for the treasury market to go, hey, yeah, we're kind of worried about that. Because as you see, financial markets have this incredible ability to take a worry. After all, on Monday, we were all worried that the Delta variant was going to wipe out global economies. So that's why the Dow went down 700 points. But Tuesday, hey, not a problem anymore. Did anything really change? No, but narratives, the market doesn't give up positive narratives easily. Right now, the market really doesn't want to give up the everything's okay in the economy. We're getting enough growth. We're not seeing so much growth that we're going to get inflation move higher. So the market is saying, hey, we're not talking about the Fed doing anything on rates until way, way, way down the road. When we're all graybeards in 2023. Anything else?
Scott says, what are your favorite global stock countries?
What are my favorite global stock countries? Oh God, I wish I liked China more. I mean, this is the great economic story, but the Chinese government has been just pounding its big innovative technology companies of Alibaba and Tencent and JD.com. So, and they have, and so they've been doing that, which has hit the stock price. On the other hand, they haven't been doing very much really to fix their bad debt problem. So China is an economy that because of what's going on in the government, I don't like much. I think if you were looking at a place that maybe because it's been down so long, it looks like up to me. You want to look at, can I say this, Brazil? And I wouldn't look at any of the big Brazil exporters because that depends on the Chinese economy. Natura and Company, which is a Brazilian cosmetics company, they bought Avon, they bought Body Shop, so they're now really global. Been down. This is the only Brazilian stock I've been buying lately, and it's been doing pretty well. Since I recommended it for the millennial portfolio, I think it's up like 25%. So those are the things. The other place to look, I think, is Europe. And there you might want to look at companies that are suppliers to the global auto industry because there's been a real chip shortage that has crushed demand. So there I've been looking at European chip makers like NXP Semiconductors and Infineon, which has a IFNNY ticker. So those are the global stocks I've been looking at lately. Anything else?
I mean, do you want to talk about Apple?
Do I want to talk about Apple? No.
Wasn't that in your...
Yeah, it was. We can talk about Apple. I think I've talked about Apple. I think Apple is going to. I think Apple will do really good earnings. I bought some options ahead of the earnings date on the 27th, so that's my attempt to get in on Apple. The stock has not been going anywhere, but I think it will do well when it announces earnings. It's usually a good quarter for Apple. So those are the things that we talk about now. We'll do another one of these in a couple of weeks. If you want to find out when, one way to do it is to subscribe to my YouTube channel. And of course, if you like this, give it a thumbs up like.
And what are your sites?
And what are my sites? The sites, the free site is JubakPicks.com, and the paid subscription site is JubakAM.com. 3 portfolios that I follow and build on the free site, 6 on the paid site, and some of those have stocks that directly address these questions about technology. Okay, thanks very much.
Sign off.
Bye now.